conventional mortgage programs? Well, let's get into it. Hey, it's Eric Osnes with ericismybanker.com and CMG Home Loans, giving you an educational series on different types of loan programs and information you need to be a more educated buyer in this mortgage world. So let's talk about conventional. The primary category for conventional loans is what's called conforming loans. Conforming loans meet the underwriting guidelines of the secondary markets. That's Fannie Mae and Freddie Mac. Who are Fannie and Freddie? Well, those are GSEs, government-sponsored enterprises. They buy mortgages from banks and mortgage companies, freeing up those companies' capital so they can go turn around and make even more loans. Conforming loans have maximum loan limits, which fall into two categories: standard, what we call conforming loan limits, and high balance loan limits that are available only in counties where there's higher priced homes, such as King, Pierce, and Snohomish counties in Washington state. Conventional loans are available for 1 to 4 unit properties. You can use them as an owner-occupied purchase, a second or a vacation home, or as an investment property. If you're a first-time home buyer, the minimum down payment for a single family conforming conventional loan is 3% down. The minimum down payment for a high balance loan is 5% down. And you can finance a 2 to 4 unit property with as little as 5% down. This is a recent change, which is great news for us. If your down payment is less than 20% though, conventional loans require that you carry private mortgage insurance, or PMI. PMI is typically added to your monthly payment, but there are also options where you can make a one-time premium, or you can split it into a one-time premium plus a much lower monthly premium. The cost of PMI varies, and it's based on your credit score, the amount of your down payment, and the loan amount itself. The most expensive PMI is if you put 3% down, but then it goes lower at different strata. 5% down it's less, 10% down it's less, and 15% down it's less, and with 20% down or more, there'd be no PMI charged at all. In most cases, PMI can be removed from a conventional loan once you've built up sufficient equity in the property, provided that you have an acceptable payment history. It can be removed in a few different ways. One way is once you pay the loan balance down to 80% of what you paid for the home. Another way is after 2 years, we can do a new appraisal, and as long as our loan amount is no more than 75% of the new appraisal amount, we can remove it. And a third way is if you've made significant remodels to the home, we can do a new appraisal in less than 2 years, don't have to wait the 2 years, and as long as the loan balance is no more than 75% of that new appraisal, we can remove the PMI. The funds required for your down payment on a conventional loan and closing costs can come from your documented savings, proceeds from a secured loan like a 401k plan, or it can be a gift from friends or relatives. We even have a special program where you can crowdfund your down payment, which is perfect for wedding registries and things like that. When we underwrite a conventional loan, the maximum allowed debt-to-income ratio is 50%. That's the total monthly payments for your mortgage plus any other debts, car loans, credit cards, student loans, alimony, child support, things like that, divided by your gross monthly income. So it can't go over 50%. If you're purchasing a 2 to 4 unit property, we can use 75% of the fair market rent for the rented units to help you qualify. And that can be a huge game changer for somebody that's looking to build some wealth through real estate. In summary, conventional conforming loans are typically less expensive than FHA loans. You can have 3% down for first-time buyers. The PMI can be removed once you build up sufficient equity. And the ability to purchase 2 to 4 unit properties with 5% down is a real game changer. For more information, just reach out. You can call me, 206-915-3742. You can email me, eric@ericismybanker.com, or look for me on social media. Just look for Eric is my banker for more educational videos as well as lots of other cool stuff. Hope that information is helpful. Talk to you soon.